Welcome to Wealth Matters Podcast. I have Paul Moore today. With decades of experience and an impressive resume, Paul offers a fresh perspective on creative real estate investing and philanthropy in 2019. Paul is also an experienced podcast guest, having appeared on 60 plus shows and counting. Also, he has his own podcast show, How to Lose Money. Of course, I don't think I can talk a lot more about Paul's experience, so I'll let him chime in. Paul, welcome.
Hey, it's great to be here, Alpesh.
Absolutely. So can you add to your bio? I'm pretty sure you have a lot more you can add.
Yeah, so I got an engineering degree, which was my first mistake. And then I got an MBA, which was not a mistake.
Oh, okay.
Yeah, I went to Ford Motor Company, and
nice.
I never hated big companies like Ford, but I actually found myself really wanting to be an entrepreneur.
Okay.
So after 5 years, I launched my own company. Everything worked out just so perfectly well.
Wow.
Not normal. And
right.
we sold that company to a publicly traded firm.
That's awesome.
Then I moved to my family to the mountains of Virginia. I had some young children, and I thought, I'm an investor now. And
entrepreneur and investor.
Yeah, the truth is I was a speculator, and I was actually a shiny object chaser.
That's me.
I made a lot of mistakes. So I made a lot of money and lost a lot of money over the next several years. And I dove into real estate. I spent 11 years in residential flipping and buying and selling lots, subdivisions, building a handful of houses. And then I was trying to figure out, how do I get into commercial real estate?
Right.
The wealthiest people in the world do commercial real estate, but I don't know how to get in. I don't know who to trust. I finally got in 2011. We did a multifamily project, and I've been in commercial ever since.
That's awesome. So it seems you have been around for a while.
Yeah, a little while. You can tell from the hair.
Yes. At least you have some. I don't. No, that's great. So when you were working for Ford, what made you think that you want to be an entrepreneur? So you're not like me, where I got fired in 2009 and I had no choice but to become an entrepreneur, because I realized that I don't want to work for another employer, another business anymore, right? So I didn't have any choice. But what made you think about being an entrepreneur, or I should become an entrepreneur?
Yeah, so Alpesh, I really value my family. I had 2 young kids. Actually, at the time, we just had 1 child, and we have 4 now. But I looked around at the people who had climbed the ladder ahead of me, 20, 30 years ahead of me, and they either had relocated 7 or 8 times,
right,
or they were working really long hours. And I just thought, I don't know that I want to do that for somebody else. I think if I'm going to work long hours, or if I want to relocate, I want to do it on my terms,
right,
because of a corporate mandate. And I knew that the people who had turned down those relocations had generally not gone much further. And I thought, boy, I think I'll be, if I don't jump, I think I'm going to be one of those guys. Now, at the same time, I had this passion to do something in the evenings and weekends. So I was spending time. I tried to start a property tax consulting business back in the, was it the 80s? Yeah, 89.
Wow.
So anyway, quite a long time ago.
Yes. So that's great. Yeah. So for me, I did not have choice, but I thought about the same thing as you mentioned, because we were expecting our first child and I got laid off like 3 months before we were going to have our first child.
Wow.
And I realized that I was also traveling same way a lot, because I was in IT consulting. And I said, okay, why shouldn't I do this for myself, right? I got fired. I don't want to go back. I can work same hours. At least I have some flexibility. And I've been doing this for now over 10 years. At least, I still work same amount of hours or maybe more, but I have a lot more flexibility. I just take off whenever I want to. I play with the kids, so I think it's just the mindset, right?
Right. Right.
So,
Yeah, absolutely.
so with your kind of experience, I don't know what all I'm just confused that we can talk about a lot of stuff. So, but I do want to, because I was also a stock market investor. I have done a lot of Forex futures, option trading, and I barely do any stocks now. So I want to talk about, difference between speculating and investing. Can you
Yeah,
share some thoughts on that?
absolutely. So let's step back a second before we jump into that, and let's ask ourselves, what is true wealth? So I'm looking at this guy that has this amazing mansion about 5 minutes from me. Is that true wealth? Or, is the guy, the multifamily syndicator that has two jets, or at least he
Right.
had two jets? Uh,
I know who you're talking about.
is
But
that
he had
true
to,
wealth?
right.
Yeah, what were you saying?
No, I know who you're referring to, and he had to let go his employees recently, it seems.
Yeah, I heard that. So, he may have true wealth, but that's not it. True wealth,
Right,
I would say, is assets that produce income.
right.
And if we're going to get true wealth, Warren Buffett said, unless you learn to make money while you sleep, you'll have to
Yeah,
work until you die. And so I was trying to figure out, how can we get assets that produce income? And so there are two routes to get there. One is through speculation, and the
uh-huh.
other is through investing. Now, investing is when your principal is generally safe and you have a chance to make a return through
Right.
cash flow and appreciation.
Yeah, and that's sorry to interrupt, but that's the first rule of investment, right? Don't lose your principal.
Right. That's right. And that's what speculating does, because
Right,
speculating, on the other hand, is when your principal is not at all safe and you
uh-huh.
have a chance to make a return. And so I confused years ago the difference between, well, let's put it this way: low risk leads to low return.
Of course.
Therefore, high risk leads to fill in the blank. You would
Yep.
think it's high return, but it's not.
No.
It's the chance of making a high return and a chance of losing your money. And
Right.
the problem is the legends, the legendary investors, the people that they make movies about and write books about,
Yeah.
those people are generally speculators, like the Stanford professor who invested money in Google, or the
Right.
artist who did a graphic design for Facebook and got $100,000 worth of.
Jordan Belfort, Wolf of
There you
Wall
go.
Street.
Yeah, there you go. Jordan Belfort. And so those people are legendary. But what's not legendary is the guy and his son and daughter who go
Right.
out and they just slowly amass a lot of multifamily, self-storage, mobile homes, assets that produce income. They're not going to be making movies about them, but those
Right.
people on average will do much better in the end. A lot of developers are the risk takers. They're some of the wealthiest people in the world, but a lot of other ones, a whole lot more that we don't hear about, are delivering pizzas right now.
Ah, wow. I agree. So no, this is great. So what's true wealth? And I also keep thinking to myself a lot of times, right? Because when I'm going through this transition from IT to real estate, I'm like, what's true wealth, right? Of course, assets that produce income, but when I see someone who is having a Maserati next door, and a Tesla Model X, I'm like, is that a true wealth, or that guy is not even able to drive that car, or he's just sitting in that car 4 or 5 hours a day? Is that worth my time when I could have spent that time with my kids, or have done something fruitful for the community? So I think for everyone, the concept of true wealth or the definition of true wealth could be different, but yeah, you have to just introspect and figure out what makes sense or what should be the true wealth. I
Right.
think that's great. Thank you for bringing that up. So yes, speculating and investing.
Yeah. Right. It's a big deal. I'll tell you, here's some examples. So when I bought a 5-acre piece of waterfront property that had a private road in front of it, they would have to have a public road instead. In other words, the road would have to be rezoned, if you want to call
Right.
it that, as a public
Yeah.
road, in order for me to subdivide this into 5 1-acre waterfront lots. that was speculating. When I sent $100,000 and my friends spent a total of over $1 million into the bottom of an oil well in North Dakota, thinking it would return 10 or even 100 times as much oil, that was speculating. When I started a wireless internet company with some friends in North Dakota, that was speculating.
Wow, you started a wireless internet company.
Yeah,
wow.
we did. And there was a lot of reasons to believe it should work, but a lot of reasons it didn't.
I would think it would work, but
yeah. But, and I actually made money on one of those, a lot of money on one of those deals, but I lost money on the other two. In fact, I lost all my money on the other two.
Oh.
And so that's the nature of speculation. But, you know, investing safely with assets that produce income, like take self-storage. No, let's say I acquired a self-storage facility for $3 million. Let's say I put $2 million in debt on it, which is, you know, fairly,
which is really good LTV,
reasonable
actually.
amount.
Yeah.
So 66 or so percent debt. And then I put $1 million in cash on it. Now, the day after I go in, I know several things. Number one, it's been undermanaged by this mom and pop operator. It doesn't have a website. The rates are 20% below market of what everybody else is charging around it.
Right.
And so let's say I go in on day one, and the first thing I do is I sign a contract with U-Haul. Now I'm going to sign a contract with U-Haul, which doesn't cost me any CapEx.
Right.
I don't have to do anything.
That's a great strategy I heard of.
Yeah, it really is. And so now let's do the math on this. It's kind of hard to believe, but I've got the math to prove it. If you sign a contract with U-Haul, and if it's in a great location and U-Haul does their job, hopefully you'll be able to make $2,000 to $5,000 additional per month. Well, let's just say I know of a place in a small town in Florida that's making over $5,000 a month from U-Haul.
Wow.
Let's say it's making $4,000 a month, for our example. Now, I love commercial real estate over residential because residential real estate's value is based on comps.
Exactly. It's what the next door has sold for, right?
Right. Right. But commercial real estate's value is based on a math formula. We all love math. Yep. So value equals net operating income divided by rate of return, or cap rate.
Cap rate.
Okay. So let's use that for this example. So let's say we add $4,000 a month to you from U-Haul, no additional expense because we've already got a full-time employee there. Let's say that's $48,000 a year added to the net operating income. Now, what's the value to the facility? It's $48,000 a year divided by a cap rate. And let's just say a median cap rate is about 6%. Yeah. 48,000 divided by 0.06. It's $800,000 added to the value of that facility. So if I turn and flip it right now, I just added a significant amount to the $3 million value, but I just added 80% to my equity of $1 million. Now it's worth 1.8. Yeah.
I'm glad that you brought that up. So, and I keep telling my friends and listeners about this, that the power of leverage is amazing in real estate. It is. Right?
I know.
Because even though we moved the value of the facility from 3 million to 3.8 million, but your cash position, which was your real investment, went from 1 million to almost double 1.8 million. Right.
Right.
So that's huge.
Yes. And the bankers don't get to share in that part, right?
Nope. Yeah. And you can turn around. You may not even have to flip it. You can turn around and refinance and take most of your cash out also.
Right. Yeah. So that's one move. You know, I used to laugh when I wrote a book on multifamily in 2016. And when I heard about value add in self-storage, I kind of chuckled. I thought, wait a minute, it's 4 pieces of sheet metal, a door, and a floor. How are you going to value add? You know, when people move out of a multifamily, you know, my book was called The Perfect Investment, by the way. And when people move out, we can change the floor coverings and the paint and the cabinets and the appliances. What are you going to do in a self-storage? You're going to sweep it out and change the code on the lock. That's it. That's not true. The actual value adds in self-storage are very significant. And so you can do what I said. You can add truck rental. You can also add retail items like locks, boxes, tape, and scissors. You can raise the rates to market levels. You can increase marketing. You can actually often, a whole lot of these self-storage facilities have vacant land with them. You can put on a climate-controlled facility, especially if there's a demand for it, or you can rent to RVs and boats. There's lots of things you can do. You can charge late fees and admin fees, and there's just a whole lot of things you can do to add value. And so the operators we've been investing with are specialists in taking these facilities from a mom and pop to a professionally run self-storage or mobile home park. And then you can put a portfolio of those together and sometimes sell it to a REIT at a reduced cap rate.
REIT, hedge funds, they are always looking when you have a large portfolio.
Yeah, they're looking to write a big check, and most of mobile home parks, there's very few that you can write a big check for.
Right, barely. So a question about speculation. So all the, people who are putting money in their 401k, right? And most of the time, or not most of the time, almost all the time when it's a company sponsored 401k, because they think, oh, they are getting certain match, so I got to put up certain amount in the 401k, and they don't have any control on where they can even invest, because company or the business has chosen 30, 50, or maybe 100, so the index funds or ETFs or whatnot, or mutual funds. On top of that, the same person also starts investing in stocks as well. Would you call that a speculation, or what is that? It's just relying that, the stocks will go up at certain point.
Yeah. So like you, I'm not a big fan of the stock market anymore. No. However, I would say that Warren Buffett, if anybody in the world understands the difference between investing and speculating, he does.
Big time.
And so he's investing in equities. So I would say there is a way to invest in equities and stocks without being a full-blown speculator.
Right.
We could spend the rest of our time here today talking about Buffett's strategies and how he does that. But I'll suffice it to say this. If you're an active trader, if you're looking at it as a roulette wheel, Buffett views it as buying the whole company, even if he's buying one share.
I was just going to talk about that. Buffett controls the company. You and I can't.
Right, we can't. And so, here's what I would say real quick. There's a spectrum. At one end, you've got high liquidity. You've got high public visibility into what's going on, into stocks and bonds, that is. You can get in and out quickly.
Yes.
Which Buffett always says is a mistake, by the way. But you can, you have all that liquidity. Well, 93% of those people who actively trade fail. At the other end of the spectrum, you've got very low liquidity. You've got, you can't get your money out quickly. You're investing in things that are locking up your money for maybe 10 years. So it's low liquidity, but with commercial real estate, you're not immediately impacted by a war in the Middle East or a CEO scandal or, the mood on Wall Street, which you are over here. And even with REITs, you are.
Oh, yeah.
But over here in commercial real estate, I think it's much less speculative because people who invest with us are generally looking at a long-term hold anyway.
That's awesome. So a couple of things you mentioned, and I want to highlight those. One is about Warren Buffett, right? Where he says that don't, just buy in, buy out, because he's talking about long-term investing. But the emotional trauma with looking at the market, none of us can control that, that I got to take an action, right? Oh, I see that the market is dropping 10%. I got to get out.
Right.
Oh, and then it's dropped enough. I'm going to get in, and next day, again it's dropping, right? So like that, the market is available for you on your smartphone, laptops, everywhere, tablets, right? So you are able to, there is liquidity, but also it forces you to take action, even though you should not be taking the action, right?
Yep.
So yes, that's the key. And the second is, of course, as you said, the macroeconomic environment also affects the broader stock market or Wall Street, right? Even if
Right.
something happened in China or wherever. But whereas even if something happens in Dallas, Texas, it's not going to affect the real estate in California.
Right.
Right.
That's
So
absolutely true.
so that's huge that you have, and the the pros and cons, right? Because it's illiquid, but also because it's not forcing you to just get out of the market. It's not easy for you
Right.
to get in and get out. Same thing, even if the next door house sells for less, even just talking about residential, Zillow is not going to update the next day, right, the price of the property.
Right. Right. And you just mentioned Dallas, China, California. That reminds me, if you are in any of those locations and you're buying a share of Ford stock, or if you're buying an ounce of gold, you're going to pay the same price.
Yes.
But real estate's so different because
Wow.
the market is so inefficient, which is a reason Buffett makes so much money, because he finds inefficiencies in a hard to find place by analyzing companies so well. But we have built in inefficiencies because we have markets, that, you might pay less for a self-storage facility a mile away, or, a state away, just because you're in the right place at the right time. And so I've got a friend who I invest heavily with, who actually has a team of 4 people who are calling 8 hours a day, 5 days a week to mom and pop facilities to try to find inefficiencies and make offers on these properties. And he has returned incredible returns for us and his other investors because of this inefficient market.
No, that's great. That's amazing that you brought that up. Yeah, then that's why I don't invest in California.
Yeah, I bet.
Because it's too expensive. It's my money will go way farther in other states, right? And so of course it's a great point that you mentioned that yes, stock you'll pay the same amount, but real estate you can go wherever you numbers make sense, right?
Right. That's right.
And so what are some of the strategies you recommend for people to earn total returns of 15+% safely in an environment where banks pay less than 1% on savings accounts, CDs, money markets, etc.?
Yeah. So I already touched on this, and that is basically acquiring from mom and pop sellers. It's really hard to do that in multifamily right now. I told my wife that I was going to stay involved in multifamily the rest of my life. And then after years of banging my head up against the wall with these highly overpriced deals, getting outbid left and right, I realized, and I don't think I knew this at the time, but now I do know, 93% of large multifamily are controlled by corporations. They've already wrung the value out of those deals.
They've squeezed every penny out.
Right. But in self-storage and mobile home parks, it's very different. So there's 44,000 mobile home parks in the US, and we believe that 90% are controlled, owned, and operated by mom and pop operators with all those inefficiencies and then some. Now, these mom and pop operators don't have the desire, the resources, or the knowledge to increase their net operating income and therefore increase the value of their facilities. So these assets can be acquired and often greatly upgraded. Same is true of self-storage. There are almost 54,000 self-storage facilities in the US, which is more than all the Subways, Starbucks, and McDonald's combined. Yet about 70% or more are controlled and owned and operated by independent operators, and a huge percentage of those are mom and pops who, again, don't have the value mindset. And they, especially in times like we have right now, might sell for less than it's worth just to get out. And they're going to make an incredible profit if they sell right now. But yet, as a professional operator goes in and takes that over, they can make it so much better. So that's my strategy.
That's awesome. And you and I think alike, right? When we discussed right before the podcast, because I have been banging my head against the wall for multifamily real estate almost for last 5 years. And then literally last year I gave up. I said, okay, I've been studying self-storage and mobile home park, and it does make sense overall. Especially, I'm glad that you mentioned about mobile home parks are owned by corporation. Not only that, even the big gurus, I don't want to name anyone, but they all are teaching their students. So right now, if you look up, most of the gurus are talking about multifamily and syndications. So and then they're asking their students to reach out to every broker out there, and they're helping them jumpstart, right? So most those cap rates are getting compressed like crazy. I just don't understand how can someone pay those prices for some of those assets, right? So
Yeah.
definitely I am bullish on self-storage mobile home parks, and as we discussed before, also I'm looking at senior housing
Yeah,
as
me
well.
too.
So I think those are some of the asset classes I believe they will do good.
Alpesh, you're my brother from another mother.
I wish. No, that's great. Thank you. So one more question. Why do the world's wealthiest investors invest in commercial real estate? I think we kind of mentioned the same things.
So there's the practical matter of the fact that they've got very large sums of money to deploy. And therefore, it probably doesn't make sense for them on average to be investing in residential real estate. It's just so hard to get scale. I have a friend who built up a 107 home portfolio around Cincinnati. And he said there was 107 different roofs and 107 different driveways to plow. And it was just so hard. And as soon as he realized he could buy a 150 unit apartment and it would all be right together in one parking lot, etc., he never went back. He sold all his single family. And as I mentioned earlier, single family is based on comps. And multifamily and self-storage, mobile home parks, and other commercial is based on this wonderful value formula. And it has the opportunity to leverage your returns. And so I think the wealthiest people in the world almost always invest in commercial real estate for some of those reasons. But there's one more, and that is, so a friend of mine in California who'd been involved in commercial real estate for years said, look, I can take $20 million from a family office, and if they'll let me use it for 10 years without a return, I'll just continue to reinvest that money. And then starting in year 11, I'll give them a nice return. At the end of year 20, they'll have gotten cash flow of $131 million. Remember, this is based on a $20 million investment.
Right. Wow.
And their total leveraged portfolio will be $210 million. Now, that amazed me. This was years ago. But here's what amazed me even more. The next thing he said, Alpesh, was, and I can show him how if he navigated through this 20 years perfectly, he might not have paid a dime in tax.
Wow.
And that's one of the reasons we love commercial real estate. And of course, you're well aware of this.
Right. Yeah, absolutely. We got 1031 exchanges. We got opportunity zone. You have Delaware the deferred sales trust. There are so many ways for us not to pay any tax.
Right. Yeah, it's really amazing. And then, of course, just the cost segregation studies that you're very aware of allow us to shield income for a number of years along the way as well.
And that's with 100% bonus depreciation right now.
Oh, yeah. That's, December 23rd, 2017 is a day that will live in commercial real estate investors' mind for a long time. And, that's when the tax law made commercial real estate better than ever.
No, I agree. Totally agree. So let's take a quick break, Paul, and we'll be back after the break. Welcome back to Wealth Matters Podcast. I have Paul Moore with me, and we are discussing or comparing speculation versus investing. The last part of the show is lightning round, and I'll just go through some of the questions I ask all of my guests. So my first question is, any real estate business or finance book do you recommend?
Yeah, well, I really always recommend The One Thing, which is by Gary Keller, of course. Yes. And that book really, really helped me focus a lot. There's a great multifamily book called The Complete Guide to Buying and Selling Apartments. But the one book I recommend most for anybody involved in investing is the one I'm reading for the second time right now. It's by Howard Marks from Oak Tree Capital. and it's called Mastering the Market Cycle, Getting the Odds in Your Favor.
Someone mentioned that book to me as well, like last month. I need to buy
Okay,
that one.
good stuff,
Howard Marks is
especially now.
amazing. Yeah, okay. No, I should look into that for sure. Um, Another question I ask is, what do you see after this coronavirus pandemic on the investment world, real estate world? Are you sitting on sidelines right now, or what? What
No,
what
we
are
just
you going to
invested.
do personally?
Yeah, we just invested heavily in self-storage and mobile home parks a few weeks ago. We're okay. So I don't mean to sound pessimistic, but I really do believe this is going to be quite a fatal. Fatal's not the word, but a bad blow to the economy.
Mm-hmm.
We could have either a V-shaped, W-shaped, U-shaped,
Yeah,
or an L-shaped, the dreaded L-shaped
yeah,
economic
that's the
recession.
worst one. Yep.
And if it's a V-shaped, I'm probably wrong. But if it's any of the other three, I really do believe in about 2 to 3 years, we're going to hit a bottom in commercial and residential real estate
Mm.
prices and foreclosures. And so I'm thinking a great strategy would be to have a distressed debt fund, which again, Howard Marks had a distressed debt and a distressed asset fund, I think, in 2008. And a reporter said, "So what are you selling right now in the fall of 2008?" He said, "Selling? Are you kidding? I'm
I'm
buying.
buying. Yes.
$500 million a week I'm deploying in financial
Wow.
stocks." And he made billions from that. And so did Buffett by buying when people were
Right.
scared. And so I think there's going to be an incredible opportunity to deploy assets, just deploy money into distressed debt and distressed assets in about 2 to 3 years. And the great thing about real estate is, you can lose 10% of your wealth while you go to lunch on Wall
Yes.
Street. But in real estate, you've got 2 to 3 years to assemble your
Right.
team, your tribe, and your finances to do things like this. So that's what I think is going to come.
Awesome. Thank you. How do you give back?
Did you know that if you took the record profits of Apple, General Motors, Nike, and Starbucks, and combined those, Alpesh, and then doubled that number, you'd be looking at the approximate revenues generated by human trafficking
Wow.
every year.
Wow.
And I'd like to believe if I was alive in the 1800s, I would have been an abolitionist fighting against slavery. And if I'd
Right.
have been an adult in the 1960s, I'd have been fighting for civil rights. Well, this is a civil right, and it is slavery, and it has ripped
Yes.
the heart out of tens of millions of people, and then hundreds of millions of their families and friends who have lost these people to trafficking. And so I want to see this fought passionately. I want to see it ended eventually. There is one country that's almost ended human trafficking, but just making a simple change
Really
in law.
nice.
And so I'm not raising any money for this, but we have something called freedomplaceproject.com. And we're actually going to acquire or build potentially $1 billion office tower in Dallas as our prototype. And we're going to use 100% of the developer's profits and as the owner's profits to donate to fight human trafficking and rescue its victims.
That's amazing. That's I watched a documentary on Netflix last year, and this is exactly what was mentioned. That's the biggest corporation right there, right now. The highest money making machine, and I just cannot believe that we as human are not able to fight against something like this. When we
Right,
are worried about coronavirus and everything else right now.
right.
So I would personally donate into it. I would personally participate in this. This is very close to my heart because I have 2 kids, right? And whenever my wife and I are discussing about, how we were growing up, we were outside playing all the
Right,
time. We didn't have to worry about stranger or whatnot. Our parents did not know or care about where we are, and they never even asked us after we
right,
got back home, what did you do? Where were you? Right now you're always living in fear that you can't leave your kids even for a minute, right?
right.
So things have changed so much. This is really important. Thank you for doing this. I really
Absolutely.
appreciate it. And thanks again for the show. I wish we can continue. I love talking to you. But
Yeah, it's been great.
It's about time. Thank you again, Paul.
Thanks, Alpash. I really enjoyed being on your show.
Appreciate it. Take care.